Hey, another red day on the markets, and man, Nasdaq down 3%, Dow Jones 1%, S&P 500 2%. What is actually happening? Let's talk about that and let's see, based on the current market conditions and something that just happened today, what should be the best way to make a lot of money while other people are already making and getting millionaires, and it's just getting started. All right, so as you can see today, red wave all over the place. I mean, everything is down big time, and this is mainly because look, the S&P movers, Facebook down 26%. 26%. We have Snap also down more than 22% at some point. I mean, you look at all the tech giants, it doesn't look good. Why? Because the market conditions are shifting, and with that also how people are putting their money to work. Because whether you want it or no, while the market is kind of being choppy and people calling left and right about a market about to crash worse than what we had in 2008, there are a lot of money being made elsewhere, and that's precisely what I wanted to share with you today. Because what is wrong with this picture? Everything is red except for oil. Yeah, oil. Energy. This is the only sector being green so far in 2022. All right? So far in 2022, everything went down, especially the growth sectors. Growth sectors are really those stocks that people invest the money in, but they are not actually like the futuristic companies, companies that are supposed to change the world. NEO, Tesla, electrical vehicle, solar panels, etc., etc. Those are what we call high growth, all right? The futuristic per se. But if you look at this is the composition of all the ETF, meaning all the baskets per sector. If you take retail, you take communication, you take energy, you take utilities, you take healthcare, you take real estate, you take financial, you take materials. These are all the stocks of the market, but broken down by sector. And you can see here that, man, everything is red for today. All right, except maybe for consumer staples. But what is really interesting, if you look at the last 3 months here, you will see that energy XLE has been up 19%, let's say 20%, all right, 20%. The last month, pretty much since the start of this year, up more than 15%. It will make more sense looking at this picture here. The best performing sector ETFs of the year, all right? Year to date, meaning since this year started, look at what we have. Energy sector, 23%. Financial, 1.4%. These two are the only positive in terms of performance, meaning if you put your money at the beginning of this year, you would already have made 23% if you invested in this ETF, or if you invested, generally speaking, into an energy company as a whole, average. Same thing for financial. Why? Because we have interest rates that are about to increase in order to fight inflation. We still have inflation being one of the main risks, and this is what is causing all of these other sectors, like the Nasdaq especially, to go down. So now investors are looking for companies that are supposed to continue to provide that growth, because if you don't grow, well, why should I have my money invested in your company? Because I need my money to work for me while I sleep. That's the whole purpose of being rich, all right? Not to have to trade my time or my energy for money, but to have that passive income, to make my capital grow, but also to receive those dividends. So the reason why we have the energy sector so high is because, first of all, oil is like skyrocketing, This is the West Texas Index, all right? This is the oil being produced here in Texas, have never been this high since the last 8 years. All right? If you look at some of the stocks that, can guarantee you the cheapest prices based on what we're seeing now, let's just go back at 2018, for example, all right? 2018 price were around $100 a barrel, All right. But look, the price of this company was around 382. And right now, it's slowly coming back from the low 22 cents and has now passed yesterday $1 a share. So if you invest now, that is almost 4 times your money being multiplied. For those who invested here, that is what, 4.5 times. And that's why I'm saying it's not late. Let's look at another very interesting company here in the energy sector. This is one of the favorites that the hedge funds love, the institutional investors. Why? Because they pay also a lot of dividend. Right? So not only you're making your money grow, but you're also getting that passive income every 3 months. Look, the last time oil was this high, all right, it was around what, $44 a share, and right now it's at $53. Why? Because this is a company that has not that much debt, meaning they'll be able to increase dividends and to also continue to grow as oil is getting more and more expensive. So if you are producing more oil at these prices, pretty much you are being what we call a cash cow. And that is precisely what investors are looking for in this current environment on the stock market, because it doesn't make sense to have your money into something that's going to decrease in value, especially what I mentioned earlier at the beginning of the video around the growth sectors, the growth company, the futuristic companies. So another example of, if you're looking to get your money so cheap now and also benefit from this explosion in oil prices and energy, this is another one. Callon Petroleum. Last 5 years, when oil was this high, it was around $140 a share. But right now, it's struggling still at 54. It's a little bit behind considering the other peers, like this one, Devon, which already passed way higher, pretty much double from the levels it was trading at before the pandemic. So here, you are looking at a very hefty price increase given the current targets. For the next 3 months, the targets here from the street are around $65 to $78 a share. And this is another one really exposed to markets all around the world. I mean, the last time oil was this high, it was sitting at what, $36. So we are talking about what, a 55% potential upside on your money. So one of the main things, I've observed in the market is get in as low as possible before everybody else is starting to chase those stocks or those sectors. Why? Because that's how you make a lot of money. Fear of missing out will get in. And once you have too many people into the trade, that's how the price continues to go up. And that's where you can make a lot of money by pulling out not all of your position if you still believe it's continuing to grow. So with the market already pricing oil to be around $100 to $150 a barrel at this year, man, just because of inflation and because of, what's been happening if you look around. So please get in before it's too late for you, because there is not enough places in this current market to make that much money in 2022.